Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday the 14th of April. We've had just a continuation of this risk rally really, nothing too significant in terms of upside moves today. It's interesting actually that European markets started decently higher. Now FTSE's fallen away 0.5% lower on the day. CAC has also lost its gains and it's starting to see signs of a little bit of creaking in the move higher, but still we've got S&P 500 futures, the E-mini up 1%, and that sort of helped to recover yesterday's losses really. Yeah, it'd be interesting to see how this one plays out, because at the moment we've got treasury yields which are basically going sideways, and this little risk rally is just sort of showing signs of a bit of easing. You've got the Aussie and the Kiwi now lower on the day. They were quite decently higher early morning against the dollar. Now they are trading lower. Still we're seeing euro, sterling and yen gains against the dollar, and that has just sort of weighed on the dollar index slightly lower. But yeah, it'd be interesting to see how that risk appetite move will play out, I think, in the next day or so. What we've seen is just over the weekend, countries are now, certainly the European countries and also even the US, are now starting to talk about their exit strategies, and Italy and Spain have started to ease the restrictions on their on the movement of their people, and that tends to be seen as a positive, certainly in terms of getting the economies going again. We also saw data out of China on the trade front, which was better than expected. We saw the trade numbers which were released this morning, much better than expected actually. Exports only down 6.6% and imports down 0.9%, much better than had been expected there. And that sort of helped to engender early morning a little bit of positivity, but that's just, those positive numbers just eked away in the last couple of hours or so. So in terms of today, no data and no central bankers really of any note. It's fairly quiet on the data front until tomorrow actually, with US retail sales and industrial production, but today not a great deal going on. So that takes me to my chart of the day, which is the FTSE 100. Now, FTSE is a laggard in terms of the recoveries. I mean, bear in mind that the S&P 500 is flirting or playing around with the 50% fib level of its recovery, equivalent being 6,300 area. So FTSE's way below that, not even at the 38.2% fib level, but it has now started to break out at least above the initial March reaction high, which is a positive, and the market's still running this positive, this trend higher over the past 3 weeks. You've got momentum indicators which are still running higher as well. But you just sort of look at this and you think, well, it's not really all that strong in terms of momentum. Near-term outlook's okay. 40 to 50 on hourly RSI seems to be sort of an area where the buying pressure just starts to come back in. 40 to 50 in the last few sessions or certainly throughout April has been the level where the bulls have returned, but just sort of rolling over again a bit this morning. You'd be looking to buy into weakness though to play this continuation of this recovery, but it'll be interesting to see how FTSE really does go, because obviously it is a laggard, and that could mean that it's susceptible to breaking down first as well. In terms of this key support, obviously key support on FTSE is the reaction, or the higher reaction low, which is comes at this reaction low here from 30th of March at 5350. Higher reaction low there, but you do have the momentum of the recovery still intact. It's just that it has not really gone as far as the other, or progressed as well as the other major markets have done. You just sort of see FTSE a little bit susceptible potentially to breaking down. So the key support initially comes in at this minor pivot level around sort of 5590, that sort of area, which was that Wednesday's low, So that's the sort of support area that you need to see holding, because if you break that, then you'd have confirmed a breach of that uptrend recovery as well. So yeah, just an important moment to see how the bulls react to this little near-term drop away, because we saw a similar type of candle on Wednesday last week, before the market then went on to break out. So how the bulls respond to this little disappointment of the breakout will be interesting, because ultimately this is a breakout that's still in progression, but it just needs to really kick on. If it can do, then get through 38.2% fib level, then yeah, 50% fib is a realistic possibility. But yeah, it is still progressing, albeit at a slower pace than other markets majorly. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.